Guys, um today I just want to show you guys what I like looking in the market and what we have to look at and how we have to take our trades. So I'm just gonna record a video on all these things. Like start from now, I'll record one video, one until I finish all of them explaining what is happening. So today the first things that I'm going to start with is gonna be market structure. Then I hope um, you're gonna watch the video, practice also and backtest it. Then from there I'll try to show the example here and there. Okay, so let me talk about, I'm sure I'm going to talk about structure and range because those two they move together. So the first things that we want to see, let's say when it comes to structure, we have an uptrend and a downtrend. And the first things that we want to look is, okay, how is the market moving? What is that market is showing us for us to be able to do it, to catch all the movement and not going to the wrong side of the market. So what you see, what is happening, you see those kind of stuff. So in terms of this case where I'm explaining about the uptrend market, you're gonna see market is making the higher high, higher low, higher high, higher low. So when market is making all those movements, but you as a trader, what is your main focus? You are not just gonna wake up because you see market is pushing somewhere here, then you expect market is gonna sell here. Okay, let me continue to the downside. Now the first things that you need to understand is where is market coming from? You see those kind of stuff. So these are the one that you need to understand. If market, let's say market was coming from a movement that was like this, then you have what you call a change of character. Market is already tell you that, okay, I'm not going anymore to the downside. I've already changed my direction. I want to go to the upside. You as a trader, what you have to wait for is to see market break a structure, then market has to return back. When markets return back, this is when you're gonna do it. You're gonna take your trade. That is what you have to look. So if I see market is somewhere here, I'm not gonna risk my money from here. Only if I see market show me a nice direction of saying, okay, I wanna drop, then I'm gonna take the entry. But where we are going, I'm gonna show you guys again about how you can take a risk entry and reduce a risk entry. So there is something that is very, 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 very important that you need to understand is that a range. Let's say example, this is my range. All this movement is my range. Here inside my range, the only thing that I need to pay attention is where is all the trap that market is leaving along the way. When we talk about the trap, there is something called a price cycle. When you understand your price cycle, you know already, okay, where market is gonna go when market want to correct, where market is going to go. This is what I want to explain right now, because in terms of structure, everyone knows that when I'm buying from here, I'm not gonna exit here, I'm not gonna exit here. Since I'm in an uptrend, my main focus is gonna be, I want to check all this liquidity, the one that all those eye point in between is the one that we call the internal liquidity. So I want to see how market is going to target all of them until we go to the external liquidity. Here is almost of the pattern that market use, the one people they call M extend, and sometimes people they call it a stop ant or shifting a market structure. Let's say example from here to here, people they call it shifting a market structure. So all those things you need to understand them properly and pay more attention to it. You see, guys. Then here I just make something like a distribution, because sometimes before market reverse is where you see institutions they are collecting their orders but very slow, in a way of them trapping people. But when you understand about Wyckoff, you know already when you need to exit, or you know already if you can continue holding your trade or not. You see those kind of stuff. So then when markets come to the downside inside your range here, there is something called a price cycle. Let me draw it for you guys. So a price cycle is like this. You see market is pushing to the upside, then market return, then market goes again up, market returns somewhere here, then market goes again to the upside, give you those reversal pattern, then market make a movement, let's say like this, then get on this level, you see market fly again. So this is what we call a cycle, guys. If you don't know these things, then you are done. Then here you're gonna see we have number 2, here we have number 1. It's the same like Elliott wave, guys. It's the same like the way you see Elliott wave. This is how these things play. You just need, there is people that they try to modify it, or market maker, whatever they call it, but it's a Elliott wave. It needs the Elliott wave. So you just need to understand what you're doing, guys. Okay, this is your price cycle, where we have wave number 1, then we have wave number 2, number 3, number 4, then number 5, then we have a reversal. How do you know that market is going to sell from there? Let's say this is your decision point. Your decision point with your candlestick like this is your zone. And sometimes you're gonna see here, maybe there will be a price imbalance somewhere there. Let me show you guys. When we mean about imbalance is, let's say market is like this, then market just gets somewhere here in between and start selling just from nowhere. And most of the people, what they'll do, they'll say, market is selling, let me just jump. They start jumping. So when you are jumping from here, you are selling. Did the market already fill up that imbalance? No, market haven't filled the imbalance. Market haven't get to your supplier level. Because you see something here in between, then you rush. You rush your trade already. You're saying, okay, I'm taking this trade, market is already selling. Next minute you just see market maybe just sell maybe 10 pips, boom, go to the upside, then kick your ass out. At the end of the day, you realize market just come to the downside. Guys, I'm sorry if I'm swearing. I'm sorry, guys. So then, this is your level where you have your demand zone. This is the level where you have your demand zone. So market is pushing to the upside. What we learn about this rule is like this. This level here, 1, 2, 3, this wave number 4, the one that is coming to the downside, cannot go below. You see, cannot go in a territory of wave number 1. Number 4 cannot go there. So number 4, this is the one most of the people, they call it break, retest, and continuation, or we use the breaker. So you need to understand why market is buying from here. At the same time, when markets come from this level and start buying, what is that market create? Market create liquidity. This is the one people, they call an inducement. So you need to understand why people, they call this as an inducement. So this one become an inducement. Sorry, guys. This one become an inducement. When market is coming to the downside, this one become a trap. This is why, this is why you see what people do is like, because we are trading supply and demand, they'll trap everyone. Supply and demand, or smart money people. Most of the people, they expect market to come here and start buying. And the worst part is, smart money, they will even put a small stop loss. They'll put even a small stop loss somewhere here, example. Because those guys, they are not from this world. They'll put something like this. Maybe market is just gonna do something like this, buy. But there is people that they're using, sometimes they don't even trade about stop loss. There is people that they trade with huge stop loss. It just depends on how how are you comfortable with your trade and your confluence, whatever you have. So you're gonna see people, they see this is a supply level. Then do you understand why market just get here and buy small, then drop again? This is the things that you need to understand. That market is already complete your cycle. So what do you need to wait for? You need to wait for market to do what? To retrace. You need to have market to give you a correction. And that correction is the one that we call a ABC pattern. The one that most of the people they call correction. And this one can drop up until the territory where we have one. This is why you see market just come all the way to where we have the original movement. But at the same time, you need to understand this is your range. This is where market is trading. Any order that is between is liquidity. You're gonna see block, you're gonna see supply, you're gonna see demand level. All those levels that you're going to see there, they are the same thing that they're going to trap you, because institution, they know this area here is where most of the people they're expecting to come and buy. They will make it that for you. This is what I explain here. They will make it for you. This movement here, they will make it for you. This is a correction. This is a correction. But here in between, you're going to find maybe sometimes this one was here and this one go back like that. Then people, they expect market to come and buy from here and go to the upside. But market just buy small and crash again. You see those kind of stuff. So market is gonna get there. Is gonna get there and start going again to the upside. You see those kind of stuff. So you need to know what is the liquidity, where market is likely to go. If you understand only this one, you know when to hold your trade. If you are buying from here and market give you this movement to go to the upside, you know already you are buying. You need to see these 3 pushes to the upside for you to be able to exit your trade at a certain level. And when you have your correction, you know already where your correction is gonna go. Your correction must come until this level here. This is why you see market just come. Then this movement is the one we call the AB pattern. This is your A, we have your B. So all this movement to the downside. And here again, you're gonna see there will be again another cycle that is going to happen here, where market is gonna drop 1, 2, 3, 4, 5. When we have this 5, then here is gonna be here you're gonna see also you're gonna have A, B, C. Again, market drop again. So here again you're gonna have another correction. Let me show you. So on this one also, this one is coming to the downside. You're gonna see also something like this. They break, they return, they break again, return, they give you another reversal point, then they correct again with 3 push to the like 2, 1, 2, 3, then they come again. Here again you're gonna have another one. Get here, give you a reversal, then next minute, boom. So you need to understand these things properly. This is how market is moving. This is how it's moving. Not everyone is showing you guys this, but I'm just showing you guys this so that at least you can be able to know why are you trading, where market is likely to go. So then you get here, you have your C movement. This is number C. Number C always be the longest one. So when number C is happening, number C is going to target all this liquidity. Number C is going to target this external liquidity. And remember, there is something that they say, a cycle never ends. Here again on number C, you're going to have again something like this. Here again. Until you see the change of character. What is the change of character? A change of character is when market just come and take out this low. When market take out this low, you know already, okay, market now is changing direction. So we are going from the bearish, let's say from a bullish to bearish. Now let me change my way of trading again. This is what we look in the market. If you just focus yourself to look at this, you understand where is liquidity. First, you understand structure. Which range are you trading in? Where is your liquidity zone? What is your pure supplier and demand zone? Believe me, you're gonna make a lot of cash. You won't have a problem. You won't even have a psychology problem, because you know when you are buying from here, then where are you going to exit? You need to exit only when you see 1. This is like what we count normally on the cycle. When they say 3 pushes like this, 1, 2, 3, then we have a correction. Markets come again down all the way to the downside for them to continue again buying to the upside. So this is what we call an SGB. If you guys remember, there was a video that I explained about the SGB. These things are learned from HL said. Before market break a significant level, market always print the point of interest. The point of interest is the one that is inside the SGB. So SGB is a significant base. So inside the significant base, this is where we're gonna find our base, and the base is what we call a supplier or a demand level. For smart money, they look more about the what you call fair value gap. They look about the blocks, those kind of stuff. So this is what we look in the market. Nothing fancy, nothing complicated, just simple and straight for you to be able to go to do it, to catch your movement, guys. Yeah, guys. So then next one, I'll try to also to look about the inducement and the liquidity. I'm sure today even explain the liquidity. I'm just gonna explain about the supply and demand level. So let me delete all my stuff here and try to see what was happening here. Then I'll do the live back testing about this. If you guys remember, I'm just from explaining something here that is just proper. I'm not gonna make a lot of story, but I'm just gonna do something like this. From there we have this one, we have this, then we have this one. Market come, then here market creates market. If you pay attention more, what you're gonna see, there was already the reversal pattern from here. This was just a correction that was happening. So from here, this is, we're going to say this is 1, number 2, number 3, then we have number 4, then number 5 fell. There is also a way that number 5 can fail. This is the one we call it truncation. Maybe one day I'll just explain those things. So then here, what you see, market has to give us a correction. Then we have a correction. So when we have that correction, you're going to see we have this movement, the one I was explaining. I'm sure I did that already. Then market return, for them to come and run this liquidity they created, then fly again. If you guys remember, I did call this trade live for it to come and buy from me. So my first level was this one, because I saw a sort of QML somewhere. No, it was this low, if I'm not mistaken. Where is that low again? Just something like manipulation somewhere. Let me see. I'm sure it must be this one, if I'm not mistaken. I don't know why this broker market didn't get in, but it was one of the low here that I mark. I'm sure it must be this one. I have to check on that video. Yeah, it was that one. That was the one. I'm sure I got it. I think it was on H4. Yes, that is the one. This is the one where I mark this low, because market created this demand level, but there was a manipulation all the way. This was the reason I marked this level here. And for people that are trading QMTR, they know already how they could take the entry from here. So my main issue today I want to try to explain is going to be somewhere here, from where market was giving us all these levels. This is where my cycle play. And then if you can check, this is where the movement starts. Then we went to the upside like this, market return, then market print number 3, we print number 4, then number 5, like what I explained to you guys. Then we start from here. So all this was just a correction movement. And this correction movement, if you can check what happened from this correction, this also can happen, because market is just touched the decision point but did not feel the decision point properly. Then market get there, run the liquidity, because most of the people, they invest a lot of cash from this low here to go to the upside. And this is your range. When you are trading your range, what is my Fibo? When you're trading your range, you need to look for where you need to buy. So here in between, as you can check here in between, I need to see what is all the levels of liquidity. You see, so already I know this one is gonna be my liquidity, because it's on the discount level. I'm not gonna buy when market is on the premium level, so I need to buy when market is on the discount. But on the discount, I need to look for all the traps. This is the trap, and let's say market gets here, because this is where we have our demand level. What am I waiting for? I want to see the change of character. If market give me a change of character, then I'll know, okay, this is when I'm gonna buy. Because here you see market seek all liquidity, the all internal liquidity until the external liquidity, because this low here is where we have so many buy stop, where people are expecting market to continue going to the downside. I've already put a sell stop for them to go. And also there is a stop loss of people that have been buying here, so market just come to run all those liquidity. And if you check again here where I was saying some blocks, some demand supplier level, the demand level, they are just there to trap people. Check the way they trap people here. Check the way they trap people that they're saying I'm holding, market is just gonna come back, then I'll continue going to the upside. This is what I call a correction. I even give you, when you look at inside the correction, you're gonna see market is gonna do what? It's gonna create again those price cycle. And from here I told you guys you're gonna see market is gonna create market is going to create what you call a correction, you see. So market correct and come to the downside. So then from here we need to mark our point of structure for us to know if market break this level, then I know already, okay, I'm going to the upside. This level was the one that print this low. So this is gonna be my main focus. Even if I'm getting, let's say, an entry from here, because again on this range we have what we call the internal structure. Check something like this. You have this one, this level from here to here. If you check, we have the lower low and lower high. Lower low, lower high, lower low, lower high. You can do like, let's say if you go to M15, M5, you can see it was just a clear structure. But where is the major structure point? Is this one, because this is the one that give me this low point. For me to continue buying, I wanna see market break this one and plus the one that is on top. So then market gets here. Already from here, if I know how to refine, I can refine my entry here. I collect already my order and start going to the upside. Now check what happened. I see market break structure here, but I need to have my whole mindset that all this one inside here, they are liquidity. So market has to run them until the top here. This is where maybe sometimes I'm gonna say, okay, let me look maybe if market is not going to hold from there, so that I can take my trade, continue to the downside or whatever. Then what you see, market just push to the upside, get here, fill this order. For people that they're trading, whatever they call it, breakout, whatever, they know already, okay, they're gonna take a sell position. Even if you check yourself just from this area here, what you see, market get on this level, create liquidity, come and fill this hidden base. Then from the hidden base, we drop again more to the downside. Inside this week, you guys remember about the footprint, I did explain. But so far for me, I'm gonna say this footprint was being used for the first time, but they didn't come to the 50%. They come back almost here on 50%. Here you could buy again. Then when market break this level, check what happened. When market break this level, market has again to retrace, because here we come until we feel this imbalance, the one that was resting here, we feel the imbalance there, then market drop. Already if you check the way market feel that imbalance, market creates what we call equal highs, or the one that we call fake out zone. So from this fake out zone, we know anytime that market is coming, I'm not gonna look for me to buy again, to sell again from here, because this is what most of the people they will do. They'll say, okay, market is already break. I'm gonna show you guys what I mean by that. Market is already break this low. Since market break this low and market is already create liquidity, these people that are clever, they'll give you what you want for them to come and trap you. Market is already break structure, market is already created this liquidity, so this zone is my valid zone, but check where is the aid is coming from. Then market gear, then start doing what? Dropping again. Then here we have what we call this imbalance area, we have this hidden base, or you can use the 50% of this footprint, 50% of this footprint for you to do what? To take the trade. But this trade I'm telling you because guys, I took this trade. So now when we are buying from here, let's say myself, when I'm buying from here, what is my main target? My main target is to see market to run this level, and market run again this one, and my main target is gonna be the higher point. Why that higher point? Because this is my full range. If you go to H4, this is my range, and this range here, what I'm gonna mark, I have to mark all the liquidity. I'm gonna say this is also is the liquidity that market has to run, because this one was trying to return here, then it fell. I have also this one here is my liquidity. So at the same time, because market is already created liquidity in a valid zone where we have our supplier, I'm gonna see how market is going to react from that zone. You see, because this other block, the one that is on top, market feel it already. So I'm just gonna look like something like that. Then what you're gonna see again, check what happened. Market just got there, then market sell. At the same time, when market was selling, market create this area. Do you see this level? Then we have liquidity again, then we have this level. Because we break, we fail to make the higher point, market return, run all this liquidity, respect this zone, then we drop. This is what we look most of the time. We look to see, because here if I go, let me first show you guys. Here if I go to M15, you see there is a break of structure there on M15. On M15 there is a break of structure there. You see guys what I was saying? We know we have our supplier zone, market break structure, because this one was the one that pushed market to go to the upside. We create liquidity. Then this also is another trap. People, they trap people because most of the people, they expect market to come back from this area for them to sell. Well, check what happened. Market goes back again to the top for them to sell. So this is what you have to look. You need to just to pay attention to whatever you are doing. And when we break this area, the only thing that you need to look is where is the area where market created liquidity. Sometimes people, they'll say, I don't see liquidity, but this void, don't you know that this void is liquidity? That void is liquidity also, you see. And people that they're trading, let's say FEG, here they'll catch just a base entry. But me myself, I'm just gonna look, okay, where there was the manipulation. So what I'm gonna do, I'm just gonna check market manipulate all this low, something like SSR from me. You see, I know already since I have this break, market is just gonna come to fill my SSR. Again, when I'm buying here, I need to have the higher time frame view of where market is going. If I go to H4, when I go to H4, I know already where my target is gonna be. This is my target, because this is my range from there to here. This is my range. Even if I go, let me delete all this stuff. If I go to daily time frame, I need to know where is my range. So my range is from there, that is the top, to this low. I'm buying here, and my main focus is for them to come and run this level. But I know here in between there is where market has to up and down, market creators, all those things. So from here, this is my higher time frame level that I need to look at. Even if I'm trading inside H4, I can trade to H1. So I know already where market is going, you see. So from here, then one thing I wanna do is gonna be, let's say this week, start from the 5th, 25th, okay, somewhere here. If you check on H1 from this area, on H1, what you're gonna see is gonna be, okay, every time we break the structure, market return back. Let's say from here, they return back to come and buy. Again from here, they created another liquidity, they come back and buy. So all those things. But the major one that I want to see, let me just cut it from here first. Let me cut it from here. Okay, so the major one, what I want to see, let's say this was, I think, Friday, if I'm not mistaken. This was Friday. This trade I miss it because of the broker. I remember I missed this trade because of the broker. I was checking for me to come and fill here, but my broker did not get up until this area. I even call it on the video, this level, one of the video. Let me show you guys. It is on one of the video. I'm not sure if
Je suis à la recherche d'une poignée d'investisseurs sérieux qui veulent essayer cette technique. Si vous
welcome back to from this one. So video, go to my YouTube. It's not. You see, it's not this one. I'm sure it must be this one. Then they try to risk. So I was using Global Prime, and this was then market never get here. Waiting since morning. Market never get here, but they start buying according to the Global Prime. So they are hiding orders. See what market is gonna but do. Check what happened here. Let me just stop it. You see, even here I was waiting for it to come there, but I end up missing this order. I didn't catch this movement from here going to the upside. You see, guys. So what someone could do, why I took this trade, why I was looking for me to take the trade, I was just looking for momentum. Do you see how market take times? So if I check from here to the upside, where market start dropping, was just 15 bars, guys, going to the upside. 3 hours. But check how many hours for market to come to the downside. Market take long to come to the downside. Almost 90 bars and like a full day just for market to come down. Already it is a sign to me that this market is gonna do it. It's gonna continue buying. When you get to my point of interest, this is why I was looking at this area. Then when I'm buying here, my target is gonna be this high. That is my first target. Like my main target is gonna be for market to take this guy, but I have also daily time frame. I know where market is likely to go, so I need to keep that also in my mindset. Then we break this structure, check the way they consolidate, they come back inside here. If you want, you can say they come to this area, whatever, FEG, whatever you can call it, after they run all this liquidity, the one that was resting here. And for people that they like to trade these things, they'll say, this is my demand level. Let me take the trade. Let me take the trade here. My demand level is there, so let me take the trade. Then check what happened. And what they'll say, this is my liquidity. Market is already create liquidity, so this is my zone. It's a nice zone. Let me continue buying. But you and your liquidity, you and your zone. Sorry guys, so you and your liquidity and your zone, all of you guys are liquidity, because when people they see this supply, this demand level, they say, okay, market is going to buy from here because I have even a liquidity, market already create everything. But check what happened. So market just get here and cheat on people, then fly to the upside again after they've already kick you out. So now here come another story. Let's say the new week start. The first thing that I look at is, where is my Asian range? Sometimes I use 7 as my Asian range, but these days I use 7 as my Asian range. I'm going to mark all my Asian range like this. This is my Asian range. Then when we come to the Asian range, the things that I want to look again inside my Asian range is, I can do something like this. I say, okay, this is my high and my low. Then I have to mark all the liquidity area. Where is the liquidity area where I'm expecting maybe, let's say, market to come and buy? Then I know already Asian range is a proper guide to know where the liquidity is resting. So I know already here I have liquidity. If market is just gonna come maybe, let's say, down, this is gonna be my level where I'm going to look at. You see those kind of stuff. So I'm gonna tell myself, okay, This is where I'm going to look for me to maybe to do what, to buy or sell, something like this. And I'm gonna look also at the 50%. Most of the time I'll look at the 50% of the Asian range. Then another thing that I'm gonna check is, okay, here example I have the liquidity, the one that was resting there. So I would likely to see market trade almost above this one for me to be able to catch the entry. Then let me see on M3. I'm gonna do something like this because of this area. Do you see this area, how it is? So I'm gonna say, okay, let me see this area, if it's going to hold my price. This is on Monday, guys. So this Asian range also, because if you check properly inside the Asian range, there is also this eye that was been taken out, and the 50% is somewhere here. So if I go to M15, let me see on M15, what is there on M15? I like my Asian range first to be red for me to see it properly. Okay, so then from here I know what is gonna be my target. Then this one here is going to be my target for me to come and buy again. So what I'm gonna do, this is gonna be my phase zone that I'll look. Let's say maybe I put my stop loss somewhere here, then my target is gonna be to the upside. So this is what I'm going to look at. And here also, if I want to scalp when they take out this higher point, I want to see how market is going to trade here. But let me check first on M1 and see if there is a strong decision point there that is going to give me, yeah, you see this area. So what I'm gonna do, I'm just gonna get my entry from there also. But this entry I have to keep it. Let me just put a bit higher here in case they come and wanna cheat. So maybe I'm gonna say, so there will be two choices with this entry I'm about to take from there. One is gonna be for market, let's say if I open two position, one is gonna be, I need to take it from 50% because there is a higher probability of market getting 50% and fly, or market just continue going to the downside. So it's gonna be like I have two entry from there. Let me do something like this. I have two entry from there for me to be able to catch the movement, then to come to the downside. So here if you check, we have this one also is liquidity that market has to run. But let's see what happened. Or let me maybe do something like this. I'll be tired of doing that. Maybe let me go to M5 at least so we can go a bit fast. Okay. So okay, another thing that I need to check is about the time. I'm gonna tell you guys when it is now 2, because I check most of the time Frankfurt and I try to see what is Frankfurt doing. I hope he's not missing my order. So I hope, I'm sure the first order was been missed, but what is the reason of me missing that order? Let me see. Or maybe because let's check here. Anyway, it is what it is. So no, it didn't miss my order, it come back to me. Yeah guys, so this is also another thing that you need to keep in mind. You don't have to panic when market miss your order, so you have just to look at it and you see what is going to happen. Yeah, so this is what happened in my order, because they create liquidity. I explained even this one on the beginning of this video. They created a decision point, they created the liquidity before my zone. to give people, so that people, they can trap more people for a nice reason, then they come back. But let's see what is going to happen next. I hope there is no worry there. But if you want to catch a new entry, let's say you want to catch a new entry, what I'm gonna say to myself is just that, okay, this level here, market break this low because it's the one that pushed there. So I'm gonna look again for where is the liquidity. Let's say here's liquidity, but I don't like taking another entry on the Asian range, because I know what most of the time happen. This could be maybe the zone that I'm supposed to use for me to be able to catch the movement. But if you check what is happening, they didn't get to where I wanted. Anyway, let's see what is going to happen. And there they could just bend me, then they go back again to my zone for the second time. And you see, so here, if I wanted to put, let's say, because normally I update my stop loss already after they take out something, then I collect my 50%. So I collect my 50% along the way our market is going. Again, here, if you check properly, the entry also here, because the way we happen here, it also become a liquidity on itself. Why? Because they wanted to look at this one. They wanted to get this one, but this one was not in my mind. I didn't even consider it has to be, but my zone was just this one and that one there. But here in between already, if you pay attention, this one also is just a liquidity that they created that I didn't even pay attention to. But anyway, it is what it is. So when market is creating something like this, then I know what is going to happen next. So at my zone, I hope my stop loss is not small already. So let's now check the time. Let's see what happened here on the time. What is the exactly time that you need to check the entry? Do you see here is the Asian range? There is 2 a.m. So I need to see what happened at 2 a.m. 2 a.m. is Frankfurt. Frankfurt print this eye. Frankfurt print this eye. Then before London open around 3 at my zone. London open for them to come and mitigate this level here. To come and mitigate this. This is for people that they like to do the ping pong stuff. So they come and mitigate this area because we have a rally, bears rally. Markets come back to come and mitigate this zone. Then they push to the upside to take out the area that Frankfurt pinned. So if you check here, this was almost 1 to 4, 1 to 5, almost close. Could be, yeah, I think must be 1 to 5, this one. Yeah, somewhere there already. So then they run, they come to the downside, create this liquidity here. If someone wanna do the ping pong, they can do it. Me, I don't do those things yet. Then market goes to the upside, they run the eye on the London. If you check here, they run this eye from this area. Then New York open from somewhere, 7. Yeah, this is 7. New York open somewhere here, but you know already what is going to happen. You see, you know already New York has to target. So this is how you need to refine your entry again. Remember, the back testing is like something that you are taking it slow or whatever. Then market goes there, market run all this level, the eye of London and the eye of Frankfurt, for them to go and mitigate this level. But we know already when we are buying from here, our major target is gonna be that one, for them to run that one. But let's see what happened. I'm sure this entry was New York. This was also New York, the same. Yes. Let me see, because my target is for them to run that eye. Sometimes you need that patient. You see, so already when they run this eye, as for me, I'm gonna collect already my profit. I'm just gonna collect my profit to see what is going to happen there. Maybe I'm gonna collect 70% of my profit. Then boom, I'm out. So when I'm out, now I need to see. This time I don't even trade anymore. So I'm gonna go to my M15 again and try to see what is going to happen for the next day, because I have a discipline that you don't even wanna know. So what I'm gonna do, maybe I'm just gonna say, Okay, let me see what is going to happen. My Asian range. What is my Asian range? I'm gonna mark maybe my Asian range until where it's going to, let's say somewhere here. I wanna see what is going to happen inside my box there of Asian range. Remember, this is the Sunday. We are on Monday, then we are going to Tuesday. Wanna see what is going to happen. Okay, so this is my Asian range story. The Asian range is there. Start from here to here. The new day is starting, but how am I gonna take my entry? So I need just to find inside my Asian range. For people that they watch the video about the Asian range, they know already. I normally take the trade. So what I look at, I look from where the Asian range started. Then I see if there is any decision point inside for me to be able to do it, to catch the entry. Then again, so if I know what is going to happen, since I'm in a bullish trend, my major issue is gonna be for me to see market trades below the open price. I'm gonna say my open price is somewhere here, and since this is the Asian range, so I need to find out what is the next decision point that market could come for them to mitigate. So the first one is gonna be inside the Asian range. I normally look inside the Asian range, what is the decision point, if I can take the trade there. And the last one is gonna be outside the Asian range. So in the outside the Asian range, I have this week here. I'm gonna say this week it's gonna be something proper for me. Let me check M1 now. Let me check M1 because there is a little of imbalance there for me to be able to catch the trade from there. But let me see on M15 first, because M1 sometimes I don't trust it. I don't trust M1 sometimes. Yeah, but I think that is enough for me. So I'm just gonna wait, because this was Frankfurt and London open. I'm sure this one I have to wait maybe for New York and try to see what is going to happen. But guys, remember, one thing that we need to pay attention also is since we have this zone here, market is already break the Asian range high. So there is two probability of market doing. It's either market is gonna come back, maybe trade inside this level. You see this zone here, or market has to run this liquidity here. So it all depends on the risk side. How do you know how to risk? I'm gonna say maybe for the first time, let's say I look at that area where market is going, then I say, you know what, I'm going to risk here. Let me maybe risk somewhere here. Now from this level, I'm gonna say this block starts from here, so let me just risk here a bit, not that much, and my target is just gonna be that high. Or I'm just gonna look, let's say we have the institution level. You see this is on here. So since these things they move 100 point, I'm just gonna point there and see if market is gonna go there. Did you ever see market hit your target before it goes your direction? You never see. These things happen. But I see the correct liquidity. I have already the chance of saying market has to run that low. Okay, now I'm in. So since I'm inside here, what must I do? You guys, you know my target is gonna be this institution level. So the first one is gonna be for them to take this, and the other institution level. Oh la la. Okay, guys, hit my TP. Okay, we hit my TP there. Pam. Already from here, I'm down. I can even go out without even crying, because I know what is happening already. You see. So what I wanna see now is if market can come until the low point, because this was New York. Already is a nice entry for me on New York. But let's see if market is gonna give us a reason of them continue going down or whatever. Okay, so here, as you can check, market already come and break this level. So when market break this level, what you wait for, we need to see if market is gonna create a set of liquidity. And what is our decision point where we are going to look forward for the trade? Remember, guys, I'm still looking for this low point here to be taken, but I want to see what time is it for me to take a trade. If it's not in my kill zone, I'm not taking a trade. But sometimes I left my I always leave my order at night and say, let me see if market is gonna continue maybe to the upside again. If I'm sleeping, this is what also I'm gonna look at. Let me see. Okay, to the tick, then market is going. So since we break structure here, we run liquidity. This is also one thing we need to pay attention. So we have to change our target. But let's see the time. I was already on the London kill zone close. So let's see the target of where market is likely to go. Already there is no momentum going to the upside. The way market is delaying from there. So what I'm gonna do here, I'm gonna say I have this hidden base, the one that is here. It's gonna be my first level that I wait for market to play. Or what I'm gonna look at is gonna be this candlestick here. It's gonna be that candlestick for me to be able to do it, to catch the entry. You see, guys, so this also is gonna be another zone that I'm going to look at. But let's see. I hope if it's opening the day that I look at the market, then I'm gonna take the trade. Do you see, guys? It's play already. It's play already going. So that could be the zone that I'm supposed to take the entry. But if you need precision, you're gonna say they use the hidden base, the one that was there. But that all zone is my HGB. So guys, I'm tired. I'm already tired. You can even see the way I'm talking. But if you want to catch the entry, then you know already what is going to happen next. So you know already what you have to look at. How is the market playing? You can say, okay, let me check maybe, because I don't like trading on small time frame, because small time frame sometimes don't give you a nice direction. I can say maybe this block here. This block is very powerful for me. But if you want to check the trade, I'd like to see if market is gonna get until this area here. Or there is one level here, I see. There is one level here, I see. This level. This level can be my my zone. Let's check this one. Let me go to M5 and see something. Because if they can come and fill this imbalance, let me just see. I'm gonna have two entries. So one is gonna be here, and the stop loss is gonna be there. Then the other one, I do this, guys. I'm not just gonna come and lie to you that I don't do this. I do this. Sometimes I place one trade with a big stop loss, maybe 30 pips, and the other one I put on the zone so that I don't miss my entry. So let's see. This thing's also the way it's consolidating. I'm sure this crap is just going without going to my word. I'm not, no. The great liquidity. They cannot just sell without creating liquidity. This is liquidity. Let me do something like this. Okay. As we can check the great liquidity, then let's see what's going to happen. They touch that level. Okay, already from here, my first order is in. You see, now remain the other one. So already from here, my first order is in. Now let's see the other one. No. You see, guys, so this is what happened. This is what I normally do. And these things also happen to me on USA. So let me show you guys the decision, why I made that decision of taking the first entry from me, because I saw this open candlestick. Then when I went to M5, it was like this. I saw this level here. You see, I saw this hidden base. Then I said to myself, you know what? Sometimes market is just gonna go to my upside, but maybe it's just gonna get here and drop already straight. Maybe this time, because we are now pushing to the upside, we want to see how market is gonna go. Then if you check again, all these things happen in today Asian range. So Asian range starts somewhere here. Yeah, Asian range starts here. So check the way they seek this liquidity. Take the low. See, the low is here. They take the low. First they start with the upside. This was the next decision point, the one that was there, the hidden base. Now we have the top. So already this level become a liquidity that they have to come and run. So my order here is not gonna be anymore, because market is gonna come and run all this level and push somewhere to the top, because this one here, let me show you. Remember here also it missed my order again from that area. So this is where I'm just gonna look to see what is going to happen, and this is what is happening right now. You see, guys. So I hope it's going to be funny after watching this video. Enjoy, guys.